In the month of April, well, easy to say, we got plenty to talk about. So, Liberation Day came at the start of April, and Trump officially released that he was going to do tariffs across the board. And immediately the market sold off. So, again, the market had stayed up primarily because it never thought that Trump would get to the point of actually doing the tariffs. Tariffs came, it sold off over 10% in about 2 days. That being said, because the tariffs have been walked back, now they've been secluded primarily to just China, outside of the kind of 10% tariff across the board. Just a lot of that's been walked back, and therefore the stock market slowly but surely has been recouping. Now, on the month, still down in most places, and certainly on the year, we are down. But I don't want to necessarily do this every single month. I know I did a bull and bear case a couple months ago, but again, there's a lot that went on in this month, and I just want to kind of talk through why would be a bull, why to be a bear, and where our firm kind of lands. So the bull case is that our companies, our economy, everything was coming from a pretty good place, a pretty strong place, and so despite all the chaos of the tariffs, despite all the confusion around them, despite what companies are saying where they're not providing guidance going throughout the rest of the year, or they're continuing to just say they don't know how to play this game that Trump is currently playing. Despite all that, there's still so much strength, and America is such a strong economy and driving force that we will continue up. Along with that, you still have advancements in AI and technology that are leading the way. Like our country truly leads the way in those. And the main reason for that argument would be that the market is forward thinking. So it essentially has priced in what has happened with the tariffs. So it receives a shock because people didn't think tariffs were going to happen. And again, a lot of the confusion on the messaging and those sorts of things. But it looks through. So it looks past what's going to happen. We're gonna see conflicting reports coming out of companies, companies dropping guidance, companies even reporting lower expectations throughout the rest of the year, which generally would be a drag, which would be a bad sign. But the market kind of looks through that, and it looks past. And generally, we see about we start seeing good news from companies 9 months after a market what's called bottom. The bottom currently is down around 20% from the year high. That is recession territory within the stock market. But our stance on market bottom is we might get back down there. We're not saying that we can't drop significantly, but we're going to be roughly around here. And again, within the next year, we do believe that we will be up for where we're at currently. Now, the bear case is that all the confusion around the tariffs has essentially knocked the U.S. off of its pedestal as the number one country in the world, and other countries are going to go elsewhere with their funds, which did happen this month. So our 10-year bond price went up, which means there's more sellers than there are buyers. And that was primarily where we saw like European and Japanese institutions that had bought in at our treasury and now had sold off. So that goes up. And what that went into, generally, it doesn't just go into another country's cash. It goes into some other asset. So that's why, at least to our firm, we saw increases in gold price getting all the way up to 3,500 at what point. And we even saw a fair amount flow into Bitcoin. Now, that's one of the reasons that it might have flown into Bitcoin. But around April 21st, we saw what's called a decoupling. So generally, cryptocurrency in general and the stock market ebb and flow. The cryptocurrency a little bit more volatile than the U.S. stock market. Now, April 21st, the stock market went down and crypto had a massive rise. So that is kind of the reasoning for that and wanted to be a note. But the bear case is really the fact that we have not, Main Street, us lay people have not experienced the effects of just this brief confusion around the tariffs. And so between ordering from other countries or as our inflows or outflows, we have not experienced that. We have not experienced the inflation that most likely will come with these tariffs. And when that happens, jobs might be lost, and our incomes might be cut, and we might go through an economic recession, which would be a drag on us. But our firm can't quite get behind that argument, just because we don't believe that within 3 or 4 months that the U.S. is not the global standard anymore. So we do believe there will be more pain. I don't think that we're out of the woods yet, but I can't get quite behind the bear case. So given that, we are continuing to dollar cost average in, we are continuing to layer some cash into the market for those who are able to do so and take advantage, because while there might be better buying opportunities coming up, now is still a great buying opportunity. Because again, if we were putting in money at the start of the year or through fall of last year, we should be putting money in now as well. Thank you guys so much for watching this, and I look forward to seeing you in May.